report on Adani, the stock price collapse. Today morning they have told that they are going to release another report on an Indian company. So we don't know which company they are going to release it. But this time my expectation is that the impact will be less. Because already they have given one report on Adani and it fell. A lot of controversies came that they released report because of their profit like that. So another report we can expect any time, but the impact will be less. That's what my feeling is. So one sector which is looking very positive in the current market condition is the pharma, where many stocks are touching new highs daily on daily basis. So some of actually we catch the pharma rally very early. A couple of years back we catch the pharma rally, and many stocks which we bought, we recommended, which we are holding in PMS, has gone up by 4 times, 5 times in the last 2 years. Some of the stocks like Newland Lab, Sidus Life Science, Cipla, all has done very well, and most of the stocks are at an all-time high. We expect the rally to continue in coming days also. Overall pharma will outperform, so that is why we have recommended 2 stocks, this time Lupin and FDC. And pharma stocks, you cannot categorize all the stocks into a single one. There are various categories. Indian formulation companies are there, US generic companies are there. Then there are CDMO companies like Newland Lab. So API companies are there who are manufacturing raw materials for pharmaceutical companies. And like that, we have to categorize it into various parts, and we have to buy the correct stocks. Cannot blindly buy all the stocks. But overall, I say a pharma thing will continue to do well. And what is surprising is 2 years back, we bought most of the stocks at a very low price. Mutual funds, many mutual funds are started buying it. In the last 3-4 months, if you see, they are buying heavily in pharma stocks. Even last month also, I saw many companies, many mutual fund schemes, they were buying Sidus Life Science at 1,200 rupees. Like that, we bought it around 400-500 range a couple of years back. So coming to the presentation, we see that after a long gap, global market have seen a good volatility. Previously, volatility used to be the norm of the stock market, but in the last 1 year, the volatility has been very less. In our market, the volatility, there is no volatility in the last 2 years. That one slide I will show it. But after a long gap, we have seen one volatility in our market also, mainly led by the up and down in global markets. So this time, the main reason for that volatility is the unwinding of yen carry trade. Previously, in the last 2 decades, I have heard that many times the market used to fall. Immediately they will tell that the reason for the fall is due to unwinding of yen carry trades. This yen carry trade is nothing that you borrow money in Japan in yen currency, because the interest rate is almost zero there. The last many years the interest rates they were maintaining as zero. So you buy, you take debt in Japan, you are not going to pay any interest. You bring back the money in dollars, and then you will invest in various asset classes, equities, cryptocurrencies, commodities. You invest it, and whatever profit you get, you will make money because you are not paying any interest on that. So the only risk is the currency depreciation or appreciation. Suppose Japanese yen depreciates, means you will get more profit, because when you give back, you have to give less. But once Japanese yen starts appreciating, means then you may start losing money, because you have to pay more for the same dollar you are going to repay. So last month also I showed one slide that in the last 2 years Japanese currency has depreciated 50%. One of the world largest trading currency. The impact we have to see it like that. Last time I showed one slide telling that Japanese currency has depreciated a lot in the last 2 years. The impact we have to see. But just when it started appreciating, and when BOJ, Bank of Japan, started hiking interest rates, this yen carry trade started unwinding. Because if currency starts appreciating, means they will lose heavily. So in a panic, they started unwinding it. That led to fall in not only stock price, but also in commodities, even cryptocurrency. Bitcoin fell from $72,000 to $50,000. now again back to $60,000. And I'm hearing that that a lot of yen carry trade money has also invested in US real estate and many real estate across the world. So the yen money is there across asset classes, not only in stock market. And now what we are hearing is that 50% of carry trade is already unwound. Some reports say that it is 75% of carry trade is unwound. Like that they are telling, but no one knows the exact figure. The person who knows the exact figure, generally he don't release that report in public. So whatever report we are getting it varies. The amount involved, they are saying 2 trillion, 4 trillion, like that they are saying. But exactly we don't know. But it looks like that the yen carry trade unwinding is almost over because the currency has stabilized. Japanese currency dollar versus yen, that has stabilized, and Bank of Japan also told that they are not going to hike the interest rate in near term, like that they have told. And that is why market has turned volatile. And the second important thing is the Q1 results. And if you see the Q1 results after many quarters, I am seeing that the Q1 results were very average, and most of the companies they posted a very average and subdued results. This is after many quarters. And overall, next presentation I will show how much Nifty companies have shown growth in sales and profitability. That detail I will show in next presentation. But overall, the Q1 results were very average. So stock prices has run up a lot. So based on the Q1 results, we expect that some consolidation in market may happen. But sector-wise and stock-wise, the price movement will continue in coming days. But overall, market may see some consolidation. And US Fed is likely to cut rate in September. So that is the consensus now. Actually, when the volatility came last week, many started telling that US should cut the rate immediately. Out of meeting cut, they have to do it to rescue the market. Like that, many statements came, but the market has stabilized. But definitely in September meeting, we are going to see the rate cut. Two reasons are there. One is that the unemployment rate has started increasing. Second thing is that inflation has come down. And so most probably US Fed will cut in September. And parallelly, the other important thing happening is the geopolitical tension, which is increasing day by day. We are seeing that Israel, with all the surrounding neighbors, they are fighting it. Day by day, more countries are involved in it. Now, Iran, they are telling that anytime they may attack Israel. We don't know whether they will do it or not. But geopolitical tensions are increasing. One thing is that the US election is coming in the next 3 months. So basically, they may try to keep the noise level very low so that they will not impact the US election. Next, by November, US elections are scheduled. And overall, Nifty and Sensex are down by around 1%, Nifty 0.5, Sensex down by 1%. Mid cap is almost flat, and small cap is 0.7%, it is down. From the high, if you see, means Nifty crossed almost 25,000 one day, it closed about 25,000. From there, if you see, almost 4% down from the peak, Nifty and Sensex. And mid cap also, if you see, means around 4 to 5% Nifty, mid cap and small cap, around 4% down from the peak now our market is. And this is the reason for the sharp fall in the global asset classes. This is the Bank of Japan, they have hiked the interest rate. If you see the interest rate, how they hike, how much they have, just 15 basis points, which is nothing but 0.15%. Which is the very low. If you see that somebody, because of hiking interest rate, why should we have to repay the money by increasing the interest rate of 0.15%? The main reason is the currency. Currency appreciation, depreciation will be very steep because of even a small change in interest rate. Now the interest rate in Japan is 0.25. This is the highest level since 2008, almost 16 years back. The interest rate was 0.25, and then during the interim period it was almost 0. Now they have hiked to 0.25. 0.1% they hiked in the month of March. Now 10 days back they hiked by 0.15%. So overall the interest rates are now 0.25%.
India, any hike is 0.25.
Yes, minimum hike.
Yeah.
Yeah. Appreciating yen, generally whenever interest rate goes up means immediate impact will be seen in currency, and that led to unwinding of yen carry trade. Even if you see in any country, suppose if India rupee is continuously depreciating against dollar means what they will immediately do is the RBI will immediately hike the interest rate. So whenever interest rate are hike, then that will come down the currency depreciation. This is the Japan interest rate from 1973. From 1973, the interest rates were plotted, and if you see that at the time interest rate are almost 8%, 7% like that. Only after 1989, it started coming down very sharply, and for last many years, it is almost near to zero. From 1998 onwards, 1999 onwards, it's almost zero. So during this phase only, this yen carry trade is started globally. People will borrow money in Japan, then they will invest it various asset classes. Also, even Indian companies also borrowing. If you see companies like REC, PFC, they borrow a lot of money from Japan because the interest rate is low. But the risk is the currency risks are there. If yen appreciates means they will lose money.
So if the interest is zero, who will deposit money in bank?
See, in Japan the problem no, all are old age people. Aged population number one. The second one is the shrinking population. There is no inflation in Japan. So suppose if you have bought one soap in 1999, 1990s in India means Lux soap may have cost 6 rupees, 7 rupees like that. Just I'm tentatively telling. Now it is 25, 30 rupees. Whereas if you see in Japan the price will be even now after 20, 30 years it is 6 only. Because there is no inflation there. One reason is the aged population. Population are getting older and old. Whenever the age becomes high means the consumption will come down. Second, population is shrinking there in Japan. Yeah. See, even this Nikkei stock market now, most of the shares is held by Bank of Japan only through ETF. Bank of Japan is not buying their own share. Now what they did is that two rate hike they did it. One rate hike 1% they did it in the month of March. Now another 0.15. So basically they hiked by 0.25%, but the impact, as you see the currency, from 162 it went peak, it fell to 142, 41 level it fell. Almost 15% something currency has appreciated because of the two hikes of interest rate. So that hike led to panic unwinding of yen carry trade, because whenever currency starts appreciating means those who borrowed money in Japan, they have to pay more money to return back. So that led to it. Now the yen has bounced back to 146, 47 level. Most probably it will be stay in that range. If you see that in the last 1.5 years, if you see that from 130 to 160 depreciated. Yen has depreciated against US dollar. If you see in the last 2 years, nearly from 110 it has gone to 160. Almost 50% depreciation was there. So all this currency depreciation led to more people borrowing money. Money will move out of Japan, and that led to further depreciation. At some point of time, it has to stop. So that is why Bank of Japan they intervened. Because when the currency starts depreciating means inflation will go up. Starts depreciating means inflation will go up. So to reduce inflation, they have hiked it. Now most probably this yen carry trade that may settle. That will be an that volatility is almost over. The another important thing which has happened is the US recession fear has come 10 days back. The main reason is that weak jobs data. One jobs data came exactly when market was falling due to this yen carry trade unwinding. At that time, one jobs data came which was very weak. That led to fear that in US the recession may come back, and that also accentuated the selling in the US market. So one day Dow Jones fell by more than 1,000 points. because of this only. Now US Fed in August meeting they have already told that they may cut rate in September. Most probably that will happen. But in between everyone started expecting that they should immediately cut rate. Already Fed is behind the curve. They have the cut rate. But I don't think they will cut the rate between two meetings because only in extraordinary situations only they will do it. In normal situation, if they cut rate means what will happen? It will send a wrong signal that something very seriously bad in economy. That's why Fed is cutting interest rate. Like that, it will send a signal. So most probably they will cut in September only. Now there are 3 meetings are there. In September, 1 meeting is there. November, another meeting. December, 3 meetings are there in current calendar year. Market participants, they are expecting around 100 to 125 basis point cut they are expecting. So September 50 basis point cut will be there. In November 25, December 25, or November another 50 and December 25. So overall 100 to 125 basis point rate cut will happen in the US. And this is the unemployment data, and this data spooked the market. Last time when Dow Jones fell by 1,000 points recently, just a few trading session back, it came to 4.3. Previously, it was around 3.8 like that, 3.7, 3.8 like that it was there. We are seeing sharp last 5 months, unemployment is continuously going up. So basically, any central bank has 2 objectives. What is the main objective of a central bank? In India, we have RBI. Like that, all countries they have central banks. So main mandate given to the central bank is that they have to keep the inflation very low. That is the major mandate given to any central bank throughout the world. Inflation they have to keep it low. Similarly, unemployment they have to keep it low. These 2 are the main mandate of any central bank throughout the world. So now see unemployment started going up. The second is inflation. Inflation, the Fed target is 2%. Now it is, we are last print we got is was 3%. So they are expecting that it will gradually come to 2%. So the US Fed target for inflation is 2%. So US Fed they have to maintain the inflation at 2%. That is the main target. 2 years back, inflation almost went to more than 8%. Around 8% it was there for more than 6 months. So the Fed target was 2%, and whereas the inflation was, actual inflation was 8%. So that is the reason why US Fed hiked the interest rate very drastically. Now inflation rate has come down. So inflation rate within normal, whereas the unemployment rate started going up. So they have to bring that unemployment level to lower levels. So that is why they are telling that US Fed may cut interest rate. Suppose inflation is at 8% now, means US Fed will not cut interest rate even though unemployment rate is high. So they have to keep the balance of both the unemployment rate and inflation rate. So most probably in September they will cut the rate, and further rate cut will possible, depends upon the data. They may cut 50% or 25% in November meeting. Employment data started showing weakness now. And this is the data from 2000, and very interesting data these and all. If you see for Nifty 50 and Nifty 500, and number of days in a year with a decline of 1% or more. If you see in the last 2 years, it is one of the lowest volatility year. Previously we had in 2017, that also we had a very lowest volatility year, where the number of trading days in a year with a decline of 1% or more. So last year, throughout full year, just to 14 days only, we had a decline of 1% or more. But if you see in 2003 to 7, where the index went up by 7 times, average around 30 to 40 days were there, where the index has declined more than 1%. So such a huge volatility at that time was there. Volatility started reducing, and during COVID time, 41 days. Then the next 2 years, it was higher. But 2023, if you see, just 14 days was there. In current year, in the first 6 months, just 10 days of trading days, where we had decline of 1% or more. So basically, the volatility has come down a lot in the stock market. Till June, this has been taken. Similarly, Nifty 500, if you see that also the volatility has come down to last year just 10 days, Nifty 500, which is much lower. In 2017 also 10 was there, which indicates that we haven't seen the volatility in stock market in the last 2-3 years, and most of the investors came post COVID only. If you see the number of demat account opening and new investors who came into stock market, actually they haven't seen the volatility of stock market yet. Previously, Mr. Sadish will be knowing how market used to be very volatile those days. One day will go up and another day will come down. Like that used to happen in many days, many trading days in a year. But that volatility has been completely died down. Results, Q1 results were very muted, subdued, and even